All right, RTD clan, listen up because I got a tale about digital currency updates and big claims that are worth staying on top of. The Digital Dollar Project, or DDP for short, in a recent 39-page report is all hyped up about completing a pilot study of remittance payments to the Philippines using a simulated retail central bank digital currency. Let's remember that the DDP single mission is to advance exploration of the United States central bank digital currency. Sounds fancy, right? Well, let's dig into the details and see all it's cracked up to be. First, they used a version of DDP's champion model where they used a simulated central bank digital currency for intermediary banks, which they then gave access to Western Union for remittance to a BDO Unibank customer in the Philippines. Still with me so far? I hope so, because it's about to get even more complicated. The simulation involved obtaining digital bonds and settling CBDC distribution access controls. It examined how a central bank would issue CBDCs and distribute them to commercial banks and monetary transfer operators before hitting retail wallets. The simulation also showed how the issuing central bank would choose CBDC characteristics like decimal places, interest-bearing, transaction limits, token expiration, and the max amount of usage for each coin. Once the CBDC token was designed and the access controls were set, the CBDC will be distributed to the second-tier financial entities and then onwards to customers. Western Union then used a decentralized exchange, or a DEX for short, to trade a retail dollar CBDC for a Philippine retail peso CBDC at a rate set by a third-party oracle. Now, an oracle is a network that facilitates the transfer of tamper-proof data from off-chain sources to on-chain smart contracts. It allows networks to talk and settle math in real time from different sources. So in other words, it's a real price setting mechanism that different chains can use. And to my crypto lovers, doesn't this sound very familiar? Using the words DEX, oracles, and smart contracts, they are illustrating the real use case for decentralized exchange, it seems. And I hope no one's surprised. And let's talk about privacy, or the lack thereof. The study conveniently brushed aside privacy concerns, saying that distributed ledger technology can magically preserve privacy by giving control over consumer data sharing. And I don't know about you, but I smell a load of BS, if you ask me. Now they're trying to sell us on the idea that using distributed ledger technology makes value transfer happen within seconds, and I'm sure it might be faster, but it doesn't mean it's foolproof. There are still counterparty and credit risks lurking in the shadows, my friends. They concluded that CBDCs won't replace Western Union and BDO Unibank services, but will magically modernize processes and promote efficiencies. Now, call me skeptical, but that sounds like wishful thinking to me. Now, let's talk about the numbers. Remittances, those transactions valued at $200 to $300 a pop, totaled a whopping $626 billion in 2022. And guess what? 74 billion of that came from the good old United States. That's 7% of US households sent remittances abroad. So what about the cost? Well, sending remittances from the US to the Philippines typically costs 4.4% on a $200 transaction, with bank transfers being even higher at 7.98%. They claim this simulation could save time and money, of which I have no doubt that it can, but at whose expense? Looking through that entire report gave me the feeling that they are a lot further along with this digital transformation than they want us to believe. The DDP, created by J. Christopher Giancarlo, a former Commodities Future Trade Commission chair, wants us to believe they're just stumbling across these developments at the same time all governments worldwide are launching permission tokenized versions of their fiat currencies. The fact that they think this retail CBDC trial was a success suggests to me that they may be rushing to get these networks up and running in time for the expected market shock that's coming. I don't know for sure, but I do know that all this time, effort, money, and brain power are not being wasted. No matter what, they have something up their sleeves, and I'm sure we're going to find out sooner or later. Now that times appear to be somewhat good, don't expect that they'll be rolling out a retail CBDC in this current environment. So for now, we still have time, because despite all the recent signs that the economy is going down, the S&P is still close to its all-time high, and the economy will continue to float along until that changes. And so at the end of the day, this CBDC trial doesn't surprise me one bit. They've collaborated and partnered with all types of groups, both private and public, to try to execute and pull off this rebranding of the currency in time before something shocks the system entirely and they're not able to roll out their solution fast enough. So anyway, thought I would just take a minute, share with you what's happening and the latest developments on the retail CBDC side, just because they're working hard and it seems like they're under the clock to get this done. That gives us more time to also inform people about what's happening so people can have a chance of opting out by ultimately having more possession of cash right now. Of course, having your reserves in form of metals on the side. And if you dip and dabble and speculate in other sectors, such as the crypto space, there's going to come a time when they really crack down on that as well. So it's good to be aware and in tune with what's happening all around us. So anyway, hope all is well. Let me know your thoughts. If you found any value, hit that thumbs up, share this so more people can find out progression that they're making with these CBDCs. And the goal is to make sure everybody's informed so it catches nobody by surprise. But anyway, I'll catch you guys later.